Hello guys, and welcome back to a new video. Today I'm gonna show you how you can catch early reversals and never miss a move again. So I'm gonna show you and explain to you my personal entry model, one of the most powerful entry model there is. And also I'm gonna show you a secret way on how you can fine tune it so you can take those really high R trades and never miss a trade again. So this is a common problem. A lot of times you can have the perfect analysis, and when it's time to take the trade, price just leaves without you, and that is really frustrating, and it can lead to impulsive trading because of that. So let's not waste any more time and let's get right into it. So first of all, let me show you my entry model. I have shared that previously in my recent videos, but let's do a quick refresher about it. So as you can see, we have this right here, this red line represent a high, right? A former high or a previous high to the left, and price was trading higher. And then here we swept the high, but returned back inside the range. So we don't have a wick. We don't have body closure. This is very, very, very important. We need to see only a wick above that high. If we see a body closure, then that's not a valid entry or a valid setup. All right. If you have like a slight body closure, maybe that's something that you can play with. But in most cases, preferably, we want to see only a wick. And then we want to see this right here. We want to see the next candle or the next few candle to close below the high or the candle that caused the sweep. And then we want to take our entry once price return back inside the range, something like this. But a lot of times, since this model is based on sweep on a high, and of course I forgot that we want to see this happen inside a zone, right? We want to see this whole formation happen inside the zone, but let's focus on this right here, the CSS or the candle structure shift. We want to take our entry once price return back at least to the body of this or the wick, right? At least to the 0% of this. But a lot of times what happens is that price will keep trade lower without giving us any retracement. And the reason for that is that we are positioning ourselves just before the expansion, all right? Before each expansion, price will take some kind of liquidity and then trade lower. This is why we don't really have any retracement, right? A lot of times we'll see a quick move to the downside, and I have a lot of examples of that. So how we can modify this so it can give us retracements, so we can get in this move right here. So what I found out from my backtesting is that, let's say for example that this is the 15-minute time frame, right? This is the 15-minute time frame, and you are basing this right here on maybe a 15-minute analysis, right? So you are using the same time frame, or maybe you are using the 1 hour. So you analyze the 1 hour that we are bearish, right? And then you jump to the 15-minute and you saw this right here. So on the 15-minute, we didn't have any retracement and we would have missed the whole move, although our analysis was right. So what you want to do is that, all right, so this is the 15-minute. Once you see this sweep, you want to drop to a lower time frame, the 15-minute. So this is the 15-minute. What you want to do is drop to the 5-minute and see if we have that same formation. See if the candles only wicked above the high from here. If we see that on the 5-minute we only have wicks, then wait for the CSS to happen there and wait for that retracement to take your entry. Now you can drop even lower, go to the 1-minute time frame and see if we have only wicks. If we have only wicks, also wait for that CSS confirmation. So instead of taking it on the 15-minute time frame, what you can do is you can take it on the 1-minute time frame as long as you have only wicks, right? And this will allow you to never miss trades if you are in fact right about your analysis, you will never miss trades, and also it will give you the best RR possible because you are entering here instead of here. So let me show you a few examples of this, and this is a beautiful example. So this is a 4-hour time frame. This is on NQ, all right? This is the 4-hour time frame. What do we have? We have a zone, all right? We have a swing low. Price started trading higher. One more time sweeping this low right here. And what do we have? We have only a wick. And then when you have a wick, you wait for the CSS confirmation. You wait for price to trade above this with a body closure. With a body closure. Extremely important. And we have that here. But as you can see, we never had a retracement, and we could have missed all this move right here. This is a huge expansion to the upside. We missed that because of this. So what you want to do, based on what I told you, go to the lower time frame. Go to the 1 hour. Go to the 1 hour. See if you have the same formation. And yes, we do have the same formation. You see this candle on the 1 hour? It swept this and it never closed below it. So what you want to do is you want to wait for the CSS confirmation to happen here. We do have that here with this candle, right? With this candle closed above this and it returned back to the range. So now you could have entered and participated in this whole bullish move to the upside. But don't settle for this. Go even lower. See what happened on the 15-minute if we have the same thing. Yes, we have the same thing on the 15-minute. Only a wick, as you can see. So now we're going to work with this candle right here. Closed above it here. Alright. Return back into it. So now you have a better RR. A tight stop loss. So instead of taking the entry from the blue rectangle or a blue zone, you could have taken it from the red zone. Now you can take it even lower. Check the 5-minute time frame. So see what do we have? Do we have only wicks? Yes, we have only wicks, as you can see. Now we're going to work with this candle right here. We have the CSS confirmation, right? Return back into it. Now you have the best entry possible. The best RR, and you will not miss the move, right? Let me show you another example. Alright, so this is the 1-minute time frame, as you can see. Price swept the low right here, closed back inside the range. So what you want to do is to wait for price to close back here. We have the close and price left without you. So when you see the sweep right here, what you want to do is to go to the lower time frames. Go to the 15 seconds. See if we have only a sweep. See if we have only a wick, because there's always going to be a sweep. But see if we have only a wick. If we don't have a wick, that's not valid, and stick to the original time frame. If we have a wick, then you're going to work with this candle right here. So this candle wicked below the low. Do we have a CSS confirmation? No, we don't have a CSS confirmation. One more time, wicked below the low. So we're going to work with this candle. Do we have a CSS confirmation? No. One more time, wicked below the low with this candle. Do we have a CSS confirmation? Yes, with a body closure. Return back into it and trade to the upside. As you can see here. And price kept trading to the upside. If you waited for the 1 minute, you could have missed the whole move, right? Another time frame. This is the final example. We have the 12-minute time frame on NQ. Wick above this high inside the zone, and then we're going to work with this candle. Do we have a body closure? Yes, we do have a body closure here, but we never returned back into it, and price expanded to the downside. See how big this candle is? Because we are positioning ourselves just before the expansion happened, right? This is why we see huge legs when we see a sweep, right? So you could have missed this move, but if you go to the lower time frame when you saw this sweep right here, let's check the 5 minute. As you can see, the conditions are also met right here. We have only wicks. So now we're going to work with this candle. We never had a body closure right here. One more time, wick above this. Now we're going to work with this candle. Now we have the body closure here with this candle. Body closure, return back inside this candle. So on the 5 minute, if you use that, you could have caught this whole move. You can take it even lower and you go to the 1 minute time frame. We have only a wick, right? The wick happened with this candle right here. We don't have body closure. One more time, wicking above this body closure right here. Came back inside or came back to the candle, right? Now you could have catch this whole move, but with a way better RR. As you can see, we have another example, beautiful example right here. This is the 1 minute time frame. We have a wick below this low right here. We are inside the zone, and this is the 1 minute time frame. If we go, if we zoom in on the 1 minute time frame, this is the candle that caused the sweep, body closure above it, but we never had the chance to enter. We don't have like a retracement to it, so a missed move. Or some of you will take the entry once we close above it, but as you can see, really wide stop loss. Now if we go to the 15-second time frame, we can see that our conditions are met. We have only a wick, and this is the candle that we need to see a CSS in, and we do have that here. With the next candle, I return back into this candle, the range and price traded to the upside. So as you can see, this happens all the time, and I believe this is the only way to reduce the missing trades. All right, but keep in mind that you need to see a wick. All right, if you see the 1 minute time frame, have a sweep, and then you go to the 15-second time frame and we have a body closure, that's not valid. Go to the 1 minute, go back to the 1 minute, right, and wait for the CSS to happen there. So what you want to do now is you want to backtest this concept, collect as many examples as you can, and make sure to like this video if you found it helpful. So now if you have any questions, leave them down in the comments or DM me in my Twitter account, and I'll reply to you as soon as I can. Now happy trading and good luck.